Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, September 13th. We're going to do our pre-market morning strategy session. We had some CPI numbers out this morning pre-market, moving the market slightly. We'll go ahead and look at the market structure, then we'll look at our tick market model, and then we'll glance at the pre-market price action and set up our if this then this scenario for today.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
So let's go ahead and jump right into it. This is the SPX PM settled, all expiries turned on. Again, we are put dominated above and below spot price, as denoted by the yellow price line. That is our spot price at the closing. Narrow transition heading into today, 44.65 to 44.70. Again, it will be important, as always, here at GammaEdge that we always discuss a price getting above and staying above transition. If we want to see an advance to the upside, we would need the structure to change to more call-dominated looking structure. At the moment, we have a significant amount of out-of-the-money puts below us. We do have some out-of-the-money calls above us, but you can see that it really goes up to about 4,500. Where these negative net deltas are, and then we start capturing those positive net deltas. We will need to see price get above, as I said, transition and start moving towards this 4,500 to the downside. We have a significant amount here at 4,400. I would anticipate this to be a slow process to the downside, not a highly volatile move. If we get a pullback after CPI news and the market opens this morning, the 44.40 level, we'll note that will be a confluence on multiple expiries heading into today. We'll see how that plays out. Here's our 0DT heading in today for the SPXP. Again, very narrow transition, 44.30 to 44.35 on the downside. We are put dominated above and below spot price. We have those in the money puts above us all the way up to roughly 44.90. That's kind of where we tested up to yesterday. Important to watch the vol-u-vol-d command intraday to see if we see targeting. We would need to see these mechanically close, these puts, and then call speculation really start to come in above 44.90 and 4,500 for us to be able to move much higher. Yesterday, really that cap on that intraday move on the vol-d command, we saw 44.90, 4,500 being targeted, and then we moved down from there. So we'll see how this plays out today. Again, significant targeting down here at 44.30, 44.35, negative net deltas down there, and then we see the positive deltas start creeping in. Plus one DT for the SPXP, a little bit wider transition all the way down to 44.45. You'll notice I discussed that level earlier. We have positive in the money calls right below that at 44.50. So anticipation is if we got down to that level, you might see some sort of stalling in supply again to the upside. We are call dominated, but it's just barely call dominated. Our total OI is only 128,000 on the plus one DT. We'll see if that changes. That's a significant low number. But you really see to the upside 44.80, 85, 90, 95, 4,500 will be a slow move again to the upside, as really it's a hodgepodge of puts and calls, negative and positive net deltas above spot price. But then we have these out of money puts below spot price all the way down really to 4,400. So we'll see how this kind of plays out and see what the targeting looks like as we open and start moving through the day. Here is the SPXP balance of the week. This is into Friday. Again, put dominated above and below spot price. We do have in the money calls below us that will be supportive as the charm flows continue for the rest of the week. And then we have some out of the money calls above us, but then those trail off pretty significantly at that 4,500 level. So again, getting above 4,500 may be difficult unless we see significant targeting above that. As always, transition will be important and need to stay above transition and look for a call speculation to the upside for a price to move again to the upside. You'll also notice for the balance of the week, this 44.30, 44.35 comes in a pretty significant level on the downside there. Here's the SPXP for Monday after expiry this week. Again, narrow transition. We are call dominated, so that is a change in that state. You can see the out of the money call speculation to the upside, so that is bullish after this Friday expiry on the 15th. We'll see if this continues to stay that way. Transition widens out again. We are at the bottom of that transition level for next Monday. So again, watching these transitions and getting above that, again, right up to 4,500 will be important. And then 4,430, we've noted that multiple times now on multiple expiries, and then 4,400 to the downside. Not anticipating us to go below those levels, even on a significant amount of weakness, just because we'll show you the AM settled here in a minute. But yeah, anticipating this to be a supportive type action, a slow trudge to the downside if we get down there. SPX combo complex for the balance of the week. Again, you'll notice we are put dominated, but we have significant amount of in the money calls below us. And again, referencing that 4,450 and 4,400 to the downside, and then 4,500 to the upside. Again, anticipate us price to be sideways between those levels, possibly until the end of the month, or at least through OPEX. Here's the SPXA. This was for Friday's expiry. Again, put dominated, but noted significant amount of in the money calls below us. Again, these will be supportive as charm flows all the way down to 4,400, and 4,450 will be important. Transitions up here at 4,495 to 4,500. So I think you can pretty much get the roadmap. We continue to reference the same levels over and over between PM, AM, and combo complex. Here's the landscape view. Again, same plus GEX up here at 4,600. Negative GEX down here has moved up to 4,400. So again, out of the money call speculation still alive and well. And we do have the in the money puts below us that will provide supportive type action if we move down there towards that 4,400 level. Not anticipating anything below 4,400 unless we get a significant market structure change or some exogenous outlying news event. Here is the SPXA minus Friday all the way out. Again, notice call dominated, so we do have a significant amount of in the money calls below us. Again, referencing that 4,400 level, and then 4,450. So again, moving to the downside significantly in a quick type move would probably not be the overall plan. Again, slow move to the downside as this all gets absorbed, these in the money calls absorbed. Now that could change if we see these calls go away and start filling in with puts. So we'll make sure we watch that. And again, to the upside, 4,500 out of the money call speculation. Again, to the upside will be important. Tick market model. We had noted yesterday, intraday, when we started to get that move up, that we were still slowly moving up into the moving averages. We'll look at the tick US in a minute, but the filter tick was pretty flat. Institutions were not involved. Again, this is going to be our first step to get to the upside, moving back above the moving averages, and then moving up towards the colored ribbon, the red below cyan. Tick US, again, when we started moving up intraday yesterday, again, filter tick was extremely flat. Institutions were not involved. New lows were still outpacing new highs. Again, so the first step will be getting to the upside, getting above the moving averages. So we'll be in the Discord in a few minutes. Again, pre-market price action, we're moving into that 4470 level, and then so we'll see how that, 447 on SPY. Again, 4470 will be extremely important to get above, and then watching that transition throughout the day, and then watching the vol-u-vol-d command for targeting. So if that helps, let's make it a great day. We'll be in the Discord in a few minutes. Thanks.